Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Taxes, yours, mine, the 1%, shaping up yet again to be a key election talking point. Democrat Khanna joins us. The Silicon Valley rep weighs in on reforming the tax code and what it'll do to innovation in his neck of the woods.
Do you really want the entrepreneurs to be forced to sell their companies to larger institutions and to decline in value? I don't think that that's what you want for a startup ecosystem.
And the U.S. Open is well underway. Tennis coach for Coco Gauff, Brad Gilbert, shares the most exciting parts of the 2024 tournament.
On the men's side, this is the first All-American semi since 2005.
Plus, market meltdown, Nvidia's 9% plunge, Elon Musk's fight in Brazil, companies rolling back DEI. A lot of stories in today's episode.
None of them are boring.
It's Tuesday, September 4th, 2024. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and it's been the
first trading day of September in the books.
Chips having their worst session since March 2020. Nvidia falling more than 9%.
It was not a great showing. The Dow fell over 600 points, the Nasdaq down over 3%, and the S&P had its worst day since August, falling more than 2%. The market sell-off compounded by news that the Department of Justice had subpoenaed chipmaking giant Nvidia. That company lost $279 billion in market cap in one day, the most of any company ever. U.S. stocks aren't the only part of the global market that are down. Stocks in Asia were under pressure, too, after the tech sell-off, and crude oil is now trading below $70 a barrel. And this is all before Friday's big report from the Labor Department. The August jobs number will likely make or break the Federal Reserve's decision to cut interest rates at the central bank's September meeting. Yesterday, market guru Tom Lee told us on our TV broadcast a debate might be coming.
I think the perception of the soft landing moved to hard landing on the July jobs report because unemployment picked up. Now, if the jobs report's solid, everyone's going to flip back to like, things are too good, the Fed has to actually not cut. And so I think that's what I think is going to be the debate on Friday.
Let's get back to Joe, Becky, and Andrew.
The weird thing about Tom Lee, I thought, was that he thinks that the risk on Friday is that it's hotter.
Right. He thinks it's going to be hotter, and the Fed is good news is bad news.
That the inflation fears will be back.
Right.
The way oil is acting, I think it's
bad news is bad news. That's what I think.
I think it's looking like maybe that we're back to worrying. It could be a bad jobs number,
right?
And we're back to thinking that it could be a hard landing.
Well,
could be either way.
Because there's so many people who are looking at WTI and saying the weakness in China is not enough to explain why it's at these massive short levels, why it's at the lowest levels below $70 actually this morning at $69.97.
You know, it could be both. It could be growth.
Everything good
could
news.
Be growth. Stagflation. Could be growth.
News.
Could be growth. No, it could be growth worries and inflation worries.
Potentially.
Which is the worst
of both worlds.
Yeah, stagflation is like the worst we can have. Elon Musk battle in Brazil over his social platform X. Yesterday, Musk's satellite internet service Starlink said it would comply with court orders to block X in the country, so it could continue operations there without the threat of losing its license. Starlink initially said it wouldn't cut off access to the platform. The Supreme Court has ordered Starlink's assets frozen to ensure that X would pay its penalties. The top justice there taking the position that Musk's two companies were working in concert with, and that's always, I guess, what you could accuse the company. He has such myriad interests, and that you could never, boring tunnels and Starlink,
I thought you meant boring,
and SpaceX and Tesla. None of them are boring.
No.
But yeah.
Except for the one that actually is boring,
right,
in a different sense. Let's get an update on the carriage fee battle between Disney and DirecTV. That provider is offering customers refunds of $20 for the loss of broadcast by ESPN, ABC, and other channels that are owned by Disney. Subscribers lost access to those channels on Sunday when the existing distribution agreement expired and the signals were blacked out. The loss of those channels means that DirecTV customers will not be able to watch the debut of Monday Night Football next week or the U.S. Open tennis matches that conclude with the finals on Saturday and Sunday. And I believe DirecTV pays something around $2 billion a year to Disney, but they've been stuck in this morass where they cannot come to a new deal.
We talked a lot about this yesterday. I think they're going to come to a deal, but before football.
That would be my guess, too.
That's pretty much how this always goes. Yeah. Somebody capitulates before football.
Well, it's the mass level of leverage that you have just before.
And Molson Coors is the latest company to roll back some of its diversity policies. That's according to an internal email viewed by the Wall Street Journal. The brewer of Coors Light, Miller Beers, and others said it would no longer participate in a scoring system that measures LGBT inclusion in its workplaces. The company will also eliminate supplier diversity goals. In the email to employees, Molson Coors said it is shifting to a broader view in which all its employees know that they are welcome. Other consumer brands have recently rolled back such initiatives after facing pressure from activists, including companies like Ford, Lowe's, Jack Daniels maker Brown-Forman, and others.
A pair of commissioners at the Consumer Product Safety Commission, they're calling on the agency now to investigate Shen and Temu. This after deadly baby and toddler products were sold on both of their websites. They want the agency to examine how those retailers comply with U.S. rules and handle relationships with third-party sellers. Both have come under scrutiny for the quality of the items that they sell.
There's even been a Saturday Night Live skit on this already, talking about, they called it some combination of those two names when they did it, but it was basically, you wear this stuff, it's cheap, it's poison. It was funnier than I'm making it sound right now.
There's a movie out called Saturday Night that premiered out in Telluride. The last 90 minutes of the very first show.
Right.
Yeah, it's pretty good. Pretty good.
Oh.
What was really going on. Lorne Michaels. The guy didn't really remind me of Lorne Michaels very much.
But he was supposed to be the guy.
Yeah, the guy that actually looked kind of like Chevy Chase, John Belushi. They're all.
The same.
They're actors playing those people, but a lot of the Generation Z people out there, they're just.
They didn't know what they were watching.
Had no idea. That's the way it will happen to you.
Wait.
It already has.
I do want to say one thing that's very important.
Oh,
what did she do?
The audio.
The audio.
No.
We're getting
We're
complaints
trying to
about the
figure
audio.
out what's going on with it.
We don't know what's going on. We're trying to figure it out. We are getting complaints about it. Knox says it's fine.
Yeah. Don't switch. Don't switch for that reason. I'll give you a different reason.
Tease will be next.
Coming up next on Squawk Pod.
The competition for the dumbest economic policy is fierce these days.
Hold on to your tax brackets. We're having an unrealized gains debate. Fun. Silicon Valley Congressman and Harris campaign surrogate Khanna ironing out the equality in America's tax system.
My district is $12 trillion of value. Nvidia, Apple, Google. Folks are saying you've got all this concentration of wealth. At least they should be paying some tax. And I think that's a reasonable sentiment and a correct sentiment, but we've got to figure out the smart way to do it.
We'll be right back. This is Squawk Pod.
You are watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. The CEO of U.S. Steel tells the Wall Street Journal that the company will close mills and probably move its headquarters out of Pittsburgh if its proposed sale to Japan's Nippon Steel falls through. Separately, Nippon is saying that if the sale is completed, core senior management and a majority of U.S. Steel board members will be U.S. citizens. They've also said they'd spend about $1.7 billion investing in some of these mills that could be threatened to be closed.
We were talking about it yesterday, Andrew, and we'll have Khanna on later today. Great piece. And we it's really kumbaya. We both
You guys agree on this?
Yeah, we both agree that it should not be blocked. And the Journal.
I agree on that too.
Great piece today.
I didn't watch what you guys said.
We'll admit that the competition for the dumbest economic policy is fierce these days, with price controls on food, 10% tariffs, national rent control. So they go over the laundry list of things we talk about. But this wins the prize, according to the Journal. If it's Cleveland Cliffs, 100% of the capacity in this country will be controlled by one company. But it's a union shop, so that's why the Biden.
Look, I just even look at this. If the answer is that Nippon is going to invest in the steel mills, and by the way, I grew up right outside one of these steel mills, and my dad worked in it one summer. My uncles worked there. If the answer is you're not going to have a steel mill anymore because nobody will invest in it, that's a bad thing.
Yeah. Do we want people? Leisman sent me something yesterday. It's
that?
bad. Well, we need free-flowing capital.
You need Japan to buy stuff in
and
this
we
country.
need to be able to go buy stuff over there if it makes sense. Otherwise,
and by the way, it
can be a bad thing for the dollar. If we
it would be
get
owned
that
by the
protection.
American division of Nippon Steel that's been based here in the United States, enforced out with this.
It's just bad when both sides just demagogue it for their own reasons, and us poor schleps in the public, where we end up holding the bag for the political demagoguery. We spent time talking about the idea of taxing investors on unrealized gains. Our next guest is looking at something we've also talked about quite a bit on this program, and Andrew's been talking about it for years. Bill Ackman recently talked about it with Jay Clayton, I think yesterday, the day before, and that's taxing loans related to the gains instead of trying to do it in a way that's probably not even possible to do. But Democratic Congressman Khanna of California, his 17th district is located in the heart of Silicon Valley, and anybody that doesn't realize that is a goose that lays golden eggs constantly for this country and for the world. He's joining us today. It says in your capacity as a surrogate of the Harris-Walz campaign. I'm going to forget that. I'm going to say you're joining us today as my running mate.
Bottom of the ticket, Joe Rowe.
No. Rojo. I want a cushy job where I don't have to do anything, but I can take credit for things. We
need you in the Midwest.
I want but you tweeted it out to me, unsolicited, I think last week. What about this idea? And we've talked about it. It bears, I think, some consideration and a conversation. I immediately hear from other conservatives, we don't need to raise taxes no matter what.
Right.
But there are founders of companies that start with nothing. They have $5 billion. They die and they pass it on to their heirs.
If you're using it as cash, it should be taxed.
It's never been taxed, ever. It's never been taxed.
But they're borrowing against it.
But they borrow against it, and the idea, and it's what you came up with. Why do you not want to do Kamala's idea? Well, or whoever came up with it. Why do you not want to do the Elizabeth Warren? Why do you not want to do that one?
Let me tell you why I don't think a blanket tax on unrealized gain is a good thing. I mean, let's say you're an entrepreneur. You create a company. It gets to 100 million or 200 million on paper. Now, if you're taxing that, you're probably going to force that person to sell it. They're probably going to sell it to private equity. Do you really want the entrepreneurs to be forced to sell their companies to larger institutions and to decline in value? I don't think that that's what you want for a startup ecosystem.
That would be the unintended consequence. Jeff Bezos wouldn't have to do that. They're going after these very, I think the whole policy is demagoguing to go after these people that they say pay less of a tax rate than their maid does, and they have billions of dollars. That's what
I get why, but this is not the right way to do it. And also, 95% of investments in startups fail, and so you're going to disincentivize investments in those startups. But here's what I think we can go after. You have folks, they start to have capital appreciation. And then instead of realizing that, they take out a loan, which I call backdoor realization, to fund their entire lifestyle. They never pay tax on that. Then when they die, they pass that money on to their heirs, and their kids never pay tax on that.
But let me ask you two questions. First of all, I think to make this actually work in practice, you actually also have to have the step up in basis at death. Otherwise, the entire effort doesn't really work, because you need to change the incentive structure for why people would even want to take out these loans to begin with. Okay.
Totally agree.
There's a second piece to this, though, which is, and I actually was just on the phone with an entrepreneur in the Valley who I think everybody knows yesterday about this, who said, look, I understand what you're trying to do, Andrew, but if you do this way, it's going to disincentivize additional investment by entrepreneurs in the into either investing in their own companies or investing in other companies. So one of the things that a whole bunch of people who've made a lot of money do is they actually not only take out loans to fund their lifestyle, if you will,
right,
but they also take out the money to then make investments in other startups, in venture capital firms. By the way, venture capitalists and private equity folks often are taking loans against their own firms,
right,
to look like they have carry in their funds. So their actual carry in their own funds is coming from a loan that they're getting from the fund. And so all of these folks are calling up everybody, including, by the way, the Harris team as well, because they're aware of this, because people are calling them saying, well, if you do it this way, you're going to actually be disincentivizing investments in small businesses, to bring it all back to today's conversation that Harris has now proposed. So what do you say to all of the pushback on that front?
Well, on your first point, it's absolutely correct on the step-up a basis. And that basically means you start with $100, it grows to $1,000, you give it to your kids. The kids should have to pay the capital appreciation tax. The second point, look, the easiest way is to tax luxury items and luxury items
as
purchases.
like a VAT.
As a VAT, or, if you're going on luxury things at hotels and planes, luxury purchases, that should be taxed.
What's the line on luxury then?
Well,
what if you've already paid? What if you're somebody who's paying ordinary income and doing it?
We can figure that out. But on the loans, look, there's always going to be some disincentive or negative effect, but I think that is outweighed by the fairness of people having to pay a tax, which it's largely.
To me, it's if you are using this as cash, you should be taxed on that. If you're using what you've gotten as cash, if it's just sitting there and going along, or it's in a family farm or something along those lines, or in a company that you founded and you're not using it, that's one thing. If you are actually going to use it as cash to borrow against it for whatever reason, it's the same as cash. It should be taxed.
Exactly. It's realizing it just in a different way. And
what do your constituents say? What do all the venture capitalists call you and say on this issue?
They're opposed. They're blanket opposed to the unrealized taxation. They're open-minded to something like a tax on loans or even a tax on luxury items.
What about stepped-up basis? Who defends that?
The stepped-up basis they're also open to, which are three things you could do to raise a lot of revenue. I mean, look, here's the animating spirit, which is that folks who are doing a job as a teacher or as a janitor shouldn't be paying 25, 30% tax, and then multimillionaires paying zero. So they understand that
where are you on carried interest?
I think carried interest should be taxed.
Where are you on capital gains going to 44%?
No, I think capital gains. I think capital gains should be lower. The current state that's in now.
3%.
That the issue about over a certain amount, if you want to have capital gains move towards ordinary income, that's an open conversation. But even that makes a lot more sense as long as it's realized. But taxing the unrealized portion isn't going to generate that much more revenue, and there are all these other ways to do it.
Make it really complicated.
Okay.
Unrealized gains that are donated to charity that will never be realized by anybody ever.
Okay.
How do you feel about that? So, if you are Warren Buffett, Bill Gates, name your person.
Right.
You give unrealized stock, right? So, meaning it's never been taxed, ever.
Right.
It gets sent to said charity. We can decide whether we like certain charities or not charities. Not. It gets sold immediately by the charity.
I think they should be taxed on it. And
but there is no tax on it.
Look,
currently.
I'm all for charitable giving, but we have a democracy, and the reason we have a democracy is all of us get a say in how money is spent, and that shouldn't just be that Bill Gates and Warren Buffett get to decide what their pet causes are. So if they're going to have unrealized gains that are actually used by a charity, that's a point of realization.
The philanthropic lobby is going to call you now.
Should that be the case for all charitable giving, or just above a certain limit? It's weird, this limit above where the rules.
Look, I think you could say above $1 million or something. I mean, if you're having ordinary folks give money, that's different. But the big issue here is, we've gone in income inequality from 54 or 53 in the 1980s to 128 today. My district is $12 trillion of value. Nvidia, Apple, Google. You've got more billionaires and multimillionaires, and folks are saying you've got all this concentration of wealth. At least they should be paying some tax. And I think that's a reasonable sentiment and a correct sentiment, but we've got to figure out the smart way to do it.
If you're using it cash, I think it should be taxed too. But let me ask you, what happens with both candidates saying they think you should be taxed for tips or not be taxed for tips? How is that fair to the teacher who doesn't get any of their income in tips?
Well, look, the biggest thing we ought to do on the tips is to make sure that you have a living wage. You know, in most parts of this country...
I don't know. Should they tip?
I support not taxing tips. But
why?
Why is that?
That is ridiculous.
Because
Somebody who's a teacher, a fireman, they don't get tips.
Because some of these folks are still making $2.13.
Not in your state.
Not in my state, but in states that...
And by the way, if you're paying them $2.13, that's because the rest of your income is coming in tips.
All right. If you're a surrogate, you think your candidate ought to take a couple of questions that aren't in a teleprompter? You think maybe that might be something that you should do before the election?
I think both candidates should. I think they should come on.
He has been. He's been on constantly. He's been on too much. That might be a problem. She hasn't done anything, and it's obvious. It's obvious to everyone. And if you're a surrogate, you need to tell them to get off the whatever it's called and start.
I'll tell her to do the show.
The American people deserve to know where she stands.
Look, I think she's competent. She's capable.
Well,
and
show
she
it then. Show it then without a teleprompter.
And you know why?
Thank you, Ro.
Thank you.
I waited for the end to do that, so you can. Thank you, Joe.
Up next on Squawk Pod, tennis, anyone? If you're heading to the U.S. Open, $23 for a cocktail, but the memories, priceless. Brad Gilbert, Coco Gauff's coach and former tennis pro himself, took some time off the court to chat with us.
Every day, the first week, they were getting over 75,000, record crowd. So whatever the prices are, it's not affecting people.
You're listening to Squawk Pod from CNBC. Here's Joe Kernan.
Stand by, Joe. In 3, 2, 1. His mic. Cue.
Okay, let's talk tennis. The latest coming out of the U.S. Open tennis tournament. An investment also from Brad Gilbert, former pro tennis player, now tennis coach. You've been a longtime friend of the show. What's your longest holding position? You've been in Microsoft longer than anything?
Yeah, still Microsoft. You know, I tell my kids it's the modern bank, because if you put your money in the bank, you get zero interest. At least if you put your money in Microsoft, you're doing okay. I'd like to see their dividends be a little more than 3%, though.
Yeah, over time, Microsoft is...
That's the way to go, at least for the moment.
We'll get back to stocks in a little while. It's got to hit, for just so you know, market cap of over $1 billion if you're going to, and more than, I mean, you've got some stocks that you've come up for that have 12 letters in the symbol, and you have to look up something. It's not even the pink pages, it's the chartreuse pages where you find the dog crap.
No, back in the day, you used to have to look in the newspaper to see it. But now you go to your app, and things are a little bit easier.
$1 billion, not a billion yuan, not a billion renminbi, none of that. All right. So let's talk about. I guess we'll talk about Coco. I've known you long enough. I used to sit in the box with you, with Andre, with Andy. I'm surprised you have any fingernails. You are more nervous than the players when you're doing it. No,
I'm
you
okay.
Look
Obviously, you hurt for your players. You want the best, and sometimes things don't go the way you want. But I try not to get too elated when my player's doing well, and then you try not to get too down. Sometimes they catch you with your head down a little bit. Didn't go as well here as we'd like, but you know what? The sun comes up the next day, and then you got to be positive, and hopefully things will get better.
It's relationships don't last forever a lot of times. How's it going with Coco right now, would you say?
It's been a good 14 months. She's accomplished a lot, and the great thing is she has huge upside at 20. If she was a stock, you'd still put a buy rating on her. She's a great kid. She works hard, and good things will happen for her. Unfortunately, it wasn't a great tournament for her, but the player that beat her, Navarro, is playing great tennis. She's in the semis. Who knows? Maybe she got a legitimate shot to win it. We still got Pegula left. And on the men's side, this is the first All-American semi since 2005, Andre Agassi beat Robbie Ginipri, so we got Tiafoe versus Fritz. It'll be the first time an American man is in a slam final since 2009.
Do you think the Olympics was a problem for the Open this year?
The Olympics?
The Olympics.
No.
The fact that all of these guys,
they're tired.
by the way, who were all the medal winners, are basically all out of the Open.
So every 4 years.
And I just wonder whether you think they got tired. I don't know what happened.
No, but every 4 years we have the same issue. And obviously the toughest part is the switching of the surface. We went from grass at Wimbledon back to, well, first we went from the clay at Roland Garros, back to grass, back to clay, and the quick turnaround. So normally every 4 years, the Olympics is not very far away from the U.S. Open. The changing of the surface made it a little more difficult. I mean, listen, what about in 2021? We still called it the 20 Olympics. We came from Tokyo, but it was still on the same surface, same as Brazil in 2016. So back to 2028, it will be coming from LA, the same surface. I think that was the toughest thing, but, is what it is.
We were just talking about inflation, and one of the things that has been incredibly inflationary are the drinks that they're serving out at the U.S. Open. The Honey Deuces, they're cool-looking drinks, but I saw something about how they're $23 a drink at this point, and that has far outpaced inflation over the last 7 years.
It's probably $10 for a water. Actually, though, I heard during the Qualies Week, which is the fan week, they drew 200,000 people, and it's free for everybody to come. But they did $9 million in sales in the Honey Deuce, and prize money for the Qualies was $7.5 million. I think it's only up $1 from a year before. But if you go to anything here in New York or LA, I mean, heck, I went to a Warrior-Laker game and a beer was $18.
Yeah.
That was last year. So it's every sporting event.
It is a pretty drink.
Yeah. So if you're going to go, it's going to cost you that, But they're going to draw well over 1 million fans for the tournament. The fan week was unbelievable. And every day, the first week, they were getting over 75,000 record crowd. So whatever the prices are, it's not affecting people.
Yeah.
Who's going to take the mantle? I guess Alcaraz is a heir apparent, but there is a changing of the guard that probably has never been seen before.
Well, there's no doubt. I mean, in everything, nobody beats Father Time. Joker's done the most amazing job.
He's still going. Yeah.
I mean, Rafa's at the end. We've lost Fed. Joker's, 37. He's on the back nine. I think he'll still be good.
Hole? Probably he's on 16. At 16, he just teed off.
You know what? He's probably at 15 and holding.
Yeah.
But, Francis said something really, kind of what other players think. He goes, normally when you're in the quarters, and if you were playing Rafa, Fed, or Joker, you're looking at flights home. And I think guys now, for the first time, have a different belief. Obviously, Sinner, who's still in, plays Medvedev tonight, is the favorite. Alcaraz has already won 4 majors at 21. But I do feel like it's been 21 years, since Roddick won. And that's the question the Americans always get asked. We have 5 now in the top 20. I think they're playing with a lot more belief. So it wouldn't shock me if one of the Americans won. Sinner is still the favorite on the men's side, and Swiatek is the favorite on the women's side. So both number ones are still around.
We're talking about the health of the Open, the economic health of the Open. I'm curious about what you think of the health of tennis broadly, because there's been a big question about the health of tennis, how many people are even playing it. By the way, Nike, I mean, I know that they have their athletes, but they hardly make even tennis sneakers anymore. I mean, literally, there's been, in terms of the underinvestment in tennis, I don't know if it's underinvestment or divestment in tennis, it's not the way it used to be. And the question is, why is that? It's because there's less people playing.
You know what? I'll spin it a different way.
Okay.
I've heard.
And I love it, by the way. I play it every weekend. So
I've been playing tennis since I've been 3. I'm 63 years young. And if you play tennis, you live 9.5 years longer. And so tennis is a game forever. Whenever you pick it up, it's always there for you. People are saying, oh, pickleball's taking over. Pickleball's a great game, but there's room for everything. There's more people playing tennis now than ever. Obviously, it needs to be a little more accessible at every, from schools to more public parks. But I think tennis is in a healthy spot. And the great thing about tennis if you learn to play tennis or just play a little bit in high school or socially, it helps you in all avenues. It helps you in business, it helps you in life. And if you join a tennis club, there's a really good chance that the circle that you're with your tennis friends is the circle that you'll surround yourself for the rest of your life. It's a beautiful thing about tennis. So I'm not worried about the health of it. I'm not worried about what Pickle's doing. We should be worried about what tennis is doing, and I think tennis is in a great position to succeed and do better.
All right. Telling us we got to stop. You don't like the Fed, but I'm not going to let you go off on the Fed right now.
No, he's got to go. I would, if you got a company, you don't have somebody run a company that doesn't have any experience. How do we keep putting in scholars to be the Fed? Roger Federer is here. I'd rather have him. But there's no chance I'm letting somebody be the Fed who's a scholar that's never run a company. That's unacceptable. So that gets on my nerves.
We'll make him president.
No, can't have that. Don't get me started on that. But
I'd like to. No, I'm not going to.
No, we don't have to
BG,
talk politics.
All right, man. Good to have you on.
Thank you.
I appreciate it. And
Nice
come
to
to the tennis.
I would like to. It's later this year. It's almost over usually by later.
We're on the back. Listen, things are getting exciting now.
Yep.
Now's the time to be there.
Okay. Thanks.
Thank you.
And that is Squawk Pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Roth Sorkin. Wasn't it great to have them all back together again? You can tune in every weekday morning on CNBC at 6 Eastern and get the smartest takes and analysis from our TV show right into your ears when you follow Squawk Pod, wherever you get your podcasts. That's it. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.